So, if you've been watching the markets lately, you've definitely felt the whiplash, right? Between inflation fears, interest rate holds, and all this wild AI hype, it's just a chaotic barrage of noise out there. But today, we're going to cut right through that static. In this explainer, we're extracting the hard data from multiple in-depth financial analyses to reveal the definitive megatrends that are fundamentally shaping our near future. Let's dive in. To keep us from getting cognitive overload, we've structured this explainer around 6 core megatrends. We're looking at market fear and greed, the AI infrastructure boom, fintech and super apps, space and quantum moonshots, profitable penny stock gems, and finally, your 2026 growth strategy.
Okay, starting off with number 1, market fear and greed, and how to use volatility as an opportunity.
We are currently seeing these absolutely wild swings between extreme greed and extreme fear in the markets. So the real million-dollar question here is, do we follow the panic, or do we look at the hard data and get greedy when others are fearful? Recently, major market indicators took a massive nosedive, going straight from high greed into widespread panic. But history and the underlying financial data we're about to unpack suggest that this panic is often just a narrative, and honestly, it usually masks incredible entry points for companies that are fundamentally transforming their industries. Moving right along to trend number 2, the AI infrastructure boom, or what we like to call the trillion-dollar backbone. A staggering $120 billion. Let that number sink in for a second. That is Microsoft's planned AI infrastructure spend for 2026 alone. This is not just some software hype. We're talking about a tangible, physical build-out. Big tech companies are committing record levels of capital to data centers, grid-connected power, and optical interconnects. They're spending at a scale we literally haven't seen in a decade, simply because whoever controls this physical infrastructure is basically going to control the entire AI economy. Think of it like this. We are right in the middle of an AI gold rush, and certain companies are stepping up to be the indispensable toolmakers selling the picks and shovels. Take Broadcom, for example. They managed to design the Jalapeno custom AI chip for OpenAI in a fraction of the time it normally takes. Then you have Qualcomm pivoting heavily into data centers with their Dragonfly C1000 CPUs, securing these massive multi-generation agreements. And meanwhile, ASML holds a virtual monopoly on the $400 million extreme UV machines that are literally required to etch these advanced chips. It's a total game changer. But here's the catch. Even the absolute best chips in the world are entirely useless without memory. And this is exactly where a massive bottleneck lies. Right now, SK Hynix dominates with a whopping 60% market share in high-bandwidth memory. The demand is so off the charts that this specialized stacked memory is completely sold out all the way into 2027. So this isn't just some speculative trend we're talking about. These are confirmed locked-in orders backing a historic supercycle in hardware. Now, what's genuinely fascinating here is Meta's unique playbook in this whole infrastructure narrative. On one hand, you've got their core ad engine just printing cash, boasting 33% revenue growth and 41% operating margins. But Meta is actually using this fortress of a balance sheet to build out massive AI infrastructure without having to borrow money at today's high interest rates. Their future initiative, Meta Compute, aims to rent out all this excess AI capacity to outside customers. They're entirely bypassing the crushing upfront capital costs that are currently choking out smaller, debt-reliant cloud startups. It's pretty brilliant. All right, let's shift gears to Section 3, FinTech and Super Apps. We're talking about revolutionizing the flow of money. A perfect example of disruption in how money moves is a company called Remitly. They are completely devouring the old 1995-era strip mall remittance market. Families are aggressively cost-shopping online right now to dodge a new 1% remittance tax, and Remitly is the digital-first beneficiary of that shift. But their real superpower isn't just having a slick app, it's their 15-year regulatory moat. I mean, anyone can code a finance app in a weekend, but trying to replicate last-mile payout partnerships and regulatory approvals across 150 countries, that is nearly impossible. Taking this concept to a global scale, just look at Grab's absolute dominance over in Southeast Asia. They aren't just a rideshare company. They've built a true super app flywheel. They basically use low-margin services like rides and food delivery to hook users into a daily habit. And once that trust is established, those same 52 million monthly users are seamlessly funneled into highly profitable digital payments, consumer loans, and targeted advertising, all without ever leaving the ecosystem. And you can see that transition directly reflected in their financials. Grab's Q1 revenue is up 24% and EBITDA jumped 46%. But the really explosive metric to watch here is the 130% spike in their highly lucrative consumer loan portfolio. Every single new service they add to the app makes the platform stickier and dramatically increases margins, all without having to pay a dime to acquire new customers. Back in the US, common knowledge tells us that high interest rates kill growth. But for a platform like SoFi, the exact opposite is true. While those high rates are stifling your typical tech growth companies, SoFi actually benefits from widening net interest margins because they are a deposit-funded lender. So that broader macro fear we hear about is actually masking a business that is accelerating both its user base and its overall profitability. Let's look further out into the future with Section 4. Moonshots in space and quantum. These are the asymmetric bets on tomorrow.
Mobileye is currently on a very strict timeline, evolving from a simple driver assistance chip supplier today into a fully operational robotaxi network by 2028. Now, while autonomous driving hype might have cooled off a bit recently in the news, Mobileye has been quietly harvesting just staggering amounts of real-world road data from millions of vehicles currently carrying its chips. That proprietary data engine sets them up for a clear, dated catalyst pipeline. We're looking at re-accelerating growth in 2026, a $200 million profit swing in 2027, and material robotaxi revenue by 2028.
Meanwhile, looking straight up, the commercial space industry is absolutely booming. AST SpaceMobile is leveraging massive partnerships with telecom giants like AT&T and Google to literally build cell towers in space. Their objective is to connect standard smartphones directly to satellites, which would eliminate dead zones entirely. If they can actually execute on their launch pipeline over the next couple of years, analysts are forecasting a staggering $5 billion in revenue by 2030. That's huge.
As for quantum computing, well, this technology is rapidly moving from research to reality. The U.S. government recently poured a massive $2 billion into this sector, and IBM is capturing a huge chunk of that funding. IBM is leading not only in hardware, but with their Qiskit software, which is used by a vast majority of quantum developers today. And for a broader play on this impending trillion-dollar wave, the QTUM ETF offers a diversified basket of quantum enablers and chip makers that are setting the stage for computing power way beyond traditional physics.
Bringing things back down to earth, here's Section 5. Profitable penny stock gems and their under-the-radar cash flows. Now, these aren't your typical broken penny stocks. The hard data reveals some absolute standouts here. First up, VTEX is providing enterprise software with elite 78% margins across Latin America. Then there's Zedge, operating a smartphone personalization platform with nearly 20 million users, and they are basically printing cash with virtually zero debt. And finally, Hyperion X is utilizing a patented green technology to build a U.S. defense-backed titanium monopoly. They're projecting to produce the metal at $29 per kilogram and sell it into a market that's demanding well over $100. Then you have Hyperscale Data, which is providing an absolute masterclass in how to pivot. They're in the process of transforming a legacy, power-hungry crypto mine in Michigan into a highly lucrative AI data center. Because they already have access to these massively demanded power grids, they've been able to sign a cloud computing contract that could potentially be worth up to $3 billion as they scale their campus up to 300 megawatts. It's a brilliant repositioning. Finally, we have Taboola, an AI-powered web recommendation engine that is swinging to a clear profit. But beyond their really strong fundamentals, they're currently enjoying a very unique catalyst, mechanical buying demand. Just by being added to the Russell 2000 and 3000 indexes, index funds are quite literally required to buy the stock regardless of the broader market sentiment. That is an incredibly powerful built-in tailwind for sure.
All right, wrapping things up with Section 6, your 2026 growth strategy. Let's pull all of this together.
So what does this all mean? And how do we turn all this overwhelming data into a focused game plan for you? Well, the playbook is pretty clear. First, exploit narrative fear when underlying fundamentals remain strong. Second, focus on companies that are converting earnings into actual free cash flow, or those that possess deep regulatory moats, kind of like Remitly. Third, follow the hundreds of billions being spent on infrastructure, the optical networks, the memory, the cooling systems. And finally, balance those highly profitable megacaps like Meta and Microsoft with some calculated, data-backed moonshots. The market is going to keep swinging between fear and greed. Honestly, it always does. But armed with this structured roadmap, you can see right through all that noise. We've traced the flow of capital from physical AI data centers to space-bound telecom, all the way down to the daily habits of super app users. So, with these massive catalysts rapidly approaching, where will you decide to plant your flag? Thank you so much for exploring the data with me today in this explainer.